Hi, today is Monday, the 1st of February, and this is the weekly recap of current positions. And I'll start here with a Feb trade, which is now 18 DTE, and I'm quite inclined to close it early for a small profit. If I make $300 or so, more or less 0.75%, that may be good enough and safe enough. The alternative here is to continue de-risking it. Last week, I've started reducing the position because I wanted to enter April and I was a little bit concerned with capital constraint. I probably entered April too early. We'll see just now. But in the meantime, it was a good thing to de-risk the trade, reducing it, and I am now having only 4.4K in the market, a flattish delta, and I'm prepared to go and reduce it further for just about 2K, and who knows, I may just close it. If I leave just one small position for 50, just over 1%, that may be the way to go, at least for the next few days. When volatility is high, we see that even though gamma looks okay, however, delta is also largely influenced by volatility. So the best thing to do, maybe to make sure that there's at least some theta release, is to reduce my vega. So as I would say that if I reduce the trade to this, I may keep it on for just maybe a week and get maybe 350, 380, who knows. To be honest, I'm quite inclined to just close it. $300 and then move on, look after March and April. So that's my attitude towards this trade, just reduce it further. Of course, you can just keep the extra CCS here, and it won't make a much difference. So that I could go for this, basically. Doesn't make any difference. I'll see whether market makers are difficult on that side. Right, so that is it for February, basically on its way out. Not to be bothered with it anymore. So March I haven't done anything to in the fall. The trade is still okay, of course. The PNL T plus zero has been pushed down because of the extra volatility. Vega 129, it's on the high side, so I could be tempted to maybe add more Vega on the upside. There's not much to gain here, about 50 cents, so it wouldn't make much of a difference. That said, it could be of interest to apply a risk reversal. At this point, because delta is flattish, the risk reversal would be a right one, basically by a low PDS here. I would lose about $200 here, and maybe relooking where I could put a CCS to fund it at least partly. Maybe if I just move this, I would, well, there's really not much to gain here. So I think I will maybe just buy a PDS just to reduce my Vega exposure. My theta will still be okay. Basically, in case the market fall, I would need to keep feeding some negative delta. So that may look like micromanagement. It may not be necessary, but generally when the market is nervous and high volatility, we try and reduce the position. And once stabilized and you still have good volatility to sell, you get back into it. At 46 DT, I'm not saying I'm not going to put some money back into the trade later, but that would be interesting for me just to reduce the trade, get a little bit more negative delta because it's not enough to counteract the effect of volatility. So that's maybe something to do. Of course, I wouldn't be too happy to forfeit some profit potential. So we can maybe try and hang in there for a little longer. So in short, PDS, possibly a risk reversal with an initial CCS. We'll see how it goes. Okay, that's it. As you will see now, April was entered and it was not actually a very, very strong entry. And I chose to go very conservative because the surge in volatility was of concern to me. So I entered 3 balance flies and I started applying PCS on the downside. At the time, I didn't put 3 PCS. Basically, I didn't turn my balance butterflies into 3 broken butterflies. I kept my risk level more controlled. And as a matter of fact, I did reverse one of them. So the risk level is very little. At the same time, let's not forget that even a bounced butterfly that looks like pretty low risk, it's still a Vega negative structure. And of course, it does have problems really taking advantage of its slight negative delta. That said, I don't have much negative vega here. I've got a little bit of negative delta. So this trade should be doing okay. The question is, should I take advantage of the high volatility to sell CCS? Well, not right now, really. I don't know where the trough will be, where the IBISQ will form, and who knows where in the gyration where the high volatility will hold, and that could be maybe problematic for the CCS. So at this point, I'm not going to do anything here until the market really stabilizes. The 624 minus 624 EUL doesn't really concern me right now. We still have plenty of time. For those who are more aggressive, of course, it's very easy to bring this line back to zero by just putting down one of the long puts here if I was to do just the PCS here. As you can see, we would have virtually no upside risk, very little capital in the market. That would be still pretty much okay. But I still think we have a chance in the next few weeks of the market dropping pretty deep. So I'm happy with a quasi balanced butterfly position right now. So as you can see, I am very conservative for this cycle. I believe we will have some shock in the next few weeks, if only just regular profit taking, with the market getting back to a lower Feb, 36.30 maybe. This will still be okay with not much impact, unless again if volatility shoots back above 37.50, where the market drops to let's say 36.30, then it will not be very advantageous, but it will still behave okay. Okay, that is it for now. So a little bit of concern, maybe a little bit of stress for some, but this is still an okay position. I just have to close February and everything will be, if not cool, at least relaxed. Thank you for watching and bye for now.